Hello everyone, how's everyone doing? Hope everyone's having a nice Sunday night. I know that I'm a day late. Just a bunch of things came up on Saturday, so I wasn't able to do the weekly review as promised on Saturday nights. Or sorry, not weekly review, weekly data reviews. So we're going to be doing it today. So this week I took three trades. One I profited just over 2%. One I lost 0.5%, and the one I lost 1%. So on the week, I ended on around 300 or sorry, 400 almost. So that's just a bit less than a percent. So it's still a green week, but I still have some things to talk about. So before we go into the actual trades, let's really quickly go on to the news calendar for this week. So uh, so we had a federal funds rate on Wednesday. So Monday, Tuesday was no trading. And also Monday, Tuesday, we didn't really get provided any opportunity. These news obviously were tentative, so they didn't come out because of the government shutdown. But we did have the FOMC press conference and the federal funds rate, which they did cut rates, and we'll get into what happened on that day on the trade. So let's go back to the. So here's one. This is the day of the federal funds rate announcement. So this was pretty textbook. No, actually, pretty is an understatement. It was very textbook. See, we had 2:30 press conference, manipulate lower, and 2A 1 hour down close candle, which I was, looking for to be mitigated or as a, chance to move higher. And then once that happened, um, we traded higher. And keep in mind, this is below any accumulation range low sell side liquidity. So we took sell side. Then we did my model 2. As you can see, the run on this low here. And as you can see, the wick here, this is a very large wick. The wick is larger than the candle's body. So just the fact that this was a sweep enough from, I'd say, this candle. We didn't have to go and take the actual candle low, just because the candle low is very insignificant because it's just a very big wick. However, the body, you see it's prominent, separated. It's a identified low. This low definitely does have some, you know, sell side liquidity. So price breaching that body and closing beneath it, that's a model 2 liquidation enough for me. So once that happened, I took the long on just a displacement candle, and uh, I went into some drawdown for 2 minutes, and then from there we accelerated towards our take profit, which was didn't make that open. Could have aimed probably for the accumulation range high, and it did sorry, this also did go to near morning high, so that could have been a possible target, but we went out and that open. Or sorry, this is 8:30 open. I have it duplicated here on mistake. It is 8:30, and this is midnight. So that was the first trade. Now let's move into this trade, which I am not so proud. Very sudden mistake. I spoke about it a lot, and there's no need to go back into that because me personally, I've established the mistake that I made, and I'm not gonna go back into speaking about it. But as we can see, we took sell-side liquidity, previous data, and I longed on the first stage. And then as you can see, second stage occurred, and that one clearly flew. So I exchanged a winning trade for a losing trade. So I'm very disappointed in this. This was very irrational, as you can see. We took the previous days sell-side liquidity, and then we had this is what I would count as the first stage manipulation. We induced shorts, and then with this move higher, we trap shorts, and we also induced longs. You see how this kind of worked against me. It induced me into a long. I honestly don't know if I was awake when I was taking this trade because it is just what my model aims exactly to avoid. And I mean exactly. My model aims to benefit off of the people that go long on the first stage by taking them out on the second stage manipulation, which is what I call my model 1 long. and then I would be entering after both sides, both shorts have been trapped and both longs have been induced and then taken out. And from there, we go into a buy program of running. So this was the trade I took, the first stage, complete opposite of what I was supposed to take, which was this. This would have been my model. So my model this week so far is 2 for 2, or sorry, 2 and 0. So 2 wins, 0 losses, but because of my own human and discretionary error, it's 1-1 this week. This should have been a very good winning trade, and this should have, sorry, but I was very disappointed in myself because I noted that this was a very weird model one and I wasn't, preferred over, we know what I want to see later on. But, you know, um, as I say here, what can I do now, really? I never did anything. I never did anything close to this again. This is so very stupid, and I feel like putting my head on the wall. But what can I do now other than work to make sure this never happens again? And I'm sure this will never happen again, and it never did happen again. But yeah, that was the first losing trade. And for the second losing trade, I'm not too disappointed in this because I did follow my model. I was very patient when taking this. As you can see, we have London side. We have this pink rectangle that is a 4-hour breaker. And we also have here a bearish volume imbalance. This is a daily discounted wick. So as you can see, uh, we run London side early, early on in the morning. And then from there, later on in the PM session, we perform our model one long, which is the second stage. You see, we move lower into London, then we trade away for a while, inducing longs and trapping shorts, only to then take out the longs that were induced with the move higher, and then trap shorts with the buy program higher, which I was trying to catch here, and that's why I'm okay with not losing this trade. But I do have just one comment that I want to add. That's maybe worth watching for. But yeah, here was the trade. We did the first stage, or second stage manipulation into our model one long, and then from there we saw displacement higher and into a we had this candle that moved into a range of balances, and we accumulated in profit for a while, and then we dropped lower, accumulated, dropped lower, and then started to accumulate before dropping lower, and then running higher, touching the 0.75. I think I will be able to show you on the daily. I'll move on to it now. But this is the one thing that I want to, read with you guys. So I like this trade. It was my model one. A very poor model one showed up early in the morning, and I celebrate the fact that I did not participate. So there were, now I remember, there was a model one that happened in the morning, but it was the run on the 5-minute chart was just a sweep. I mean, sorry, it was just a wick. So this does not constitute as a model one, and I'm very happy that I did not participate in it, and that is an amazing thing that happened to me this week. This one was much more favorable. A note that I have concerning this is that it was very later in the day after the original first stage. Now, I'm not saying this with a straight empirical analysis, but just what I have picked off is that usually second stage manipulations that happen in a close time frame of the first stage, obviously with space for the pipeline sweep to occur, but not to the point where it's spaced out in different sections of the day. This is not final, but I have just picked up that usually my more displacing cleaner trades have the Model 1 sectors run lower occur within a tight time range while still allowing the 5-minute candles to form. So, and also, before I get into this, I want to talk about what I was saying here. So, remember what I said about the London sell side? It was ran very early in the morning. Okay, so it was ran very early in the morning, and then usually my more displacing and cleaner trades, it would happen in the same session. So the first stage run would happen in the same session that the second stage run happens. However, here, the first stage run happened in the morning, and the second stage run happened in the afternoon. So that's not confirmed 100% that these are weaker trades, but just what I have picked up off of the inverse experience is that the more cleaner trades have the second stage run happen in the same session. This is not saying that second stage that happen in the following sessions, or sorry, not following, that happen in sessions ahead of the first stage manipulation, there it does not mean necessarily saying that they're more prone to losing. It's just the one loss possibly out of, you know, hundreds. I still have to, go into my trades and view how much trades lost versus won. Model ones, of course, that have the second stage manipulation occur in a different session. But that's just something for me to know. But this was a good trade. Uh, beyond the fact that I could possibly find that sweeps that happen in different sessions are more prone to losing. But I think even then, this happens very rarely that I'm not able to apply the law of large numbers to be able to really dictate if these are weaker trades or not. So until then, I will continue to take them as long as they are proper 5-minute sweeps. And that is that for the trade. But I also wanted to say that I was wrong on this day for where I thought price was going to go. And that's something that's completely okay. As a discretionary trader, I have enough humility to understand that my foundation or my daily framework some days, may be incorrect. And that's something that I just have to live by. And I have to understand that I will be more correct more often than I'm wrong. And that's what will pay me. And yeah, so my trade was off a wrong basis. Since the day kept pushing past the point where I expected a reversal and reflect on my daily analysis. I expected more of a big rectangle, and that wasn't served. So I was expecting that maybe price would dip into this rectangle here, and also touch the consequent coordinates of this wick, and then reject off of it with a model 1 and push past this volume imbalance. And you see, that's what I kind of hoped was going to happen. So you see, on a section manipulation, we run into the big rectangle, which is a breaker, and we also touch into the consequent encroachment of the discount wick, and then we get on model 2, of course. But obviously, that just didn't play out, and that just means we were wrong, and that's completely fine. There's nothing that's wrong or flawed about being wrong on the data analysis. That's going to be it for today's this week's weekly review, and happy daylight savings, I guess, and I will see you on the next data review next week. Thank you all for watching.